Good afternoon. Time to check in on the markets. Global stocks rose, reversing the previous session's 2.5-year lows on the back of a rally that we saw on Wall Street, as well as hopes of more Chinese stimulus. The hot US CPI print that we received has just increased the risk, or rather the view that interest rates will be higher for longer, and that just exacerbates the risk of a recession. With the aggressive monetary policy moves from the Fed, they've been adding a lot more pressure on central banks to follow suit. Locally, we did see reports out of Bloomberg citing unnamed sources that talks between MTN and Telkom have stalled, and this is on the back of the rival proposal from another telecoms company. And when that news broke, Telkom was down about 16%. It's recovered slightly to just lower by 7%. MTN little unchanged at this point. However, to talk to us about the week that was, and also what we can expect going forward, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. So quite a very interesting market development, given the fact that we've seen that hot US CPI, but then green on the Asian side. Wall Street also closed up. How do you explain what we're seeing on the JSE right now?
Good afternoon, Nastasia, and to your viewers. Yes, extreme whiplash and volatility that we're witnessing in the markets, as you say rightly. The course inflation numbers from the US above expectations, really driven by higher rental levels and higher medical insurance, which in normal circumstances would lead to most market participants being quite concerned that the Federal Reserve would keep hiking interest rates well into next year. But we saw quite a reverse. The market was initially down almost 3% and then closed up almost 3%. We rarely see that type of intraday volatility in the US, and this has continued. There are a number of developments that one can be looking at. Obviously, the UK is one where there seems to have been a complete reversal by the current incumbent administration to firstly initially wanting to slash taxes and now saying that they'll be a lot more measured. We've seen US gilts and the currency strengthening, and there's noises that the Chancellor of the Exchequer might be relieved of his duties within basically a few days of him being appointed. So that's also like part of the news flow. You mentioned already stimulus from China. There's been also rumors in the market that we might have some kind of resolution to the Russia-Ukraine crisis. But I think a lot of it is in the domain of speculation. And I think market participants, after a very, very tough September where many indicators were in bear market, looking for any shred of news to really push markets higher.
Does that higher than expected US CPI print make it difficult for the Fed to even consider a 50 basis point hike at the end of their meeting at the end of the year?
Yeah, I mean, it's a very good question. I think the 75 basis point on the next meeting is almost a done deal. They could still reduce to 50 basis points in December if the next print for inflation is a lot better. We think that the base effects, looking at October last year, is a lot easier to basically to beat. So I think just due to base effects, because from last October inflation was so high, I think that the numbers will start to come down naturally. So there is a very high probability that we'll see 75 and then 50, and then maybe one or two more hikes into next year.
We are going to be kicking off U.S. earnings season with the U.S. banks later on. What are your expectations going into the season?
Yes, a very interesting question again. So earnings expectations, if you went back a few months, was for this quarter 3, to see earnings growth in the U.S. of about 10%. These have been dialed down to 2 to 3%. expectations are like a number of companies are likely to miss expectations, but as I said, expectations have been really dialed back. We've already seen earlier JP Morgan releasing earnings which have been well above what the market was expected. So first out of the block, good numbers, but I think it's quite a few earnings to be seen before we see any trends. But we are expecting for the first time a number of companies reporting fairly muted earnings growth this quarter.
Before I let you go, what's the key question one of your clients or any of your clients are asking at this point?
I think the key question with a lot of clients sitting with money on the sidelines is when's the right time to get into the markets. I think timing markets are always extremely difficult. We do recommend to clients, now that we've seen a strong pullback in equity markets, that it's definitely the time to start to invest now. I'm not saying markets will go straight up from here, but if you have a disciplined approach and start buying when you see share prices, especially globally, having come down 20% plus, I think over the long term that will hold you in good stead.
Patrice, thank you so much for your time. That is Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. That is it from me. Of course, we'll keep you updated with earnings season and also next week looking at China's Q3 GDP figures as well as UK inflation. That is it from me. We're going to take a break. When we come back, we'll have SME on point, so stay tuned.